Going to go through the markets as I usually do. Some macro, a little bit with the dollar and the interest rates because they're important at this time. And then we'll jump into some ETFs and stocks that you can have a look at. If we look at the NASDAQ, we had a good run since January, but we've been pulling back since that point. And I can pull back here. So I use a scroll wheel on the mouse. I'm using TC2000 software for the charting. If you want to get a free trial or $25 off your membership, check out the link in the description below. Thanks to everybody who's picked it up already. Hope you're enjoying it. I've had it for a few years. So I can turn on the some of the lines that I drew. It gets a little messy, especially if you pull out like that. But what I'm doing here is I'm drawing higher lows. So every time you pull back and then you go back up again, you got a higher low. But then we started to turn around. I also have this line here, which is the trend line, and then you can see that it got broke right around there. I have a horizontal line, goes back to June of 2022, and that's where we bounced off of it. So it's good to see previous support points as well. So I also look at the MACD, or price percent oscillator, for momentum, and you can see that we crossed down, and now we're always below. So we came close to the moving average, and then we failed. Now we're below the zero, which is a weaker area. It usually coincides with the 50-day moving average, but we are curling around a little bit. So it would have to cross, and even better would get up above the 50 again, but that's kind of the NASDAQ. They're all similar in that situation. This one's below the 50, curling around, maybe close to crossing, but hasn't done that. If we pull out, you can see we had this big downtrend where every time there was a rally back up to this trend, we failed over and over again. But then we finally broke it right here. So what happens a lot of times, you break that long downtrend, and then you go back. So if I extend that, you can see that we're back testing it. So it is possible that we could go back up again now that we've broken this big downtrend and tested it again. IWM, similar situation. Like, we broke it. We had a nice surge past the big trend line, but we had a pullback here. So we got to see what's going to happen. If we go to weekly charts, it's kind of a mess, like for the last little while, consolidating kind of, but you can see how 50 days curling around, and now we're up above that, and we're getting up above zero. So it's not like a strong uptrend or anything, but that goes for the NASDAQ. If we go to the S&P 500 as well, and then the Dow Jones is, a bit stronger. We've pulled back, we've back tested the 50, now we're doing it again, but we've crossed the MACD, price percent oscillator, the moving average here in a down sloping trend. What's also really important right now, because of the Fed and the interest rates and all that with inflation, is to look at the interest rates and the US dollar. So if we turn on the line that I drew here, we hit about, it correlates to about 4%. We pulled back, hit the support, and now we're back up again right at that point. So if we break through that, because right now there's a sign that inflation is higher, and they're going to need to raise rates more and keep them higher for longer. So it looks like this is potentially going to break through. I'm just going to quickly jump over to the 10-year yield, and you can see that that's right at 4%. And that's where, right now we're at this critical point, in a sense that and even more so than that is 4.2 or so. But if you break through that, that means that usually the markets aren't going to do as well. So the reason I'm using TBF is it's an inverse 20-year treasury. It's not the 10-year, but it reflects an interest rate because it's the inverse. So the price would be going down and the interest rates are going up. So this is reflecting, because it's an inverse of the 20-year treasury, it's indicating, sort of reflecting the interest rates. And the other thing to look at is the UUP. This is the US dollar. I'll turn on the weekly chart. You see we had this huge run in the US dollar. And that correlates to basically it inversely correlates to the market. So like, especially growth stocks and stuff like that, US dollar is going to be bad for gold. It's going to be a strong dollar. And it can often be bad for stocks, especially growth stocks. But right here we had a reversal in January, which correlates to the what's going on with the markets. But it's curling up here. So we're going to see if it breaks through there. It's right at that critical spot of the 50-day, about to cross here, or 50-week, I mean. If we look up here, it's kind of the 200-day. But, it isn't an uptrend right now. So that's generally not good for stocks and stuff like that. So another thing you can look at is VIX. We had a bit of a rise. So we have this rising VIX momentum, but we got stuck at the 50-day on the VIXY. So we haven't really broken through that 50, but that would be, you see here where we hit the 50, there was quite a volatile thing. So we haven't hit that. We've actually rejected on that. So we'd have to see another downtrend for the stocks to do better, usually. So from there, with a situation that's not too great, but you could see a bounce off the 200-day or 50-day. We're not in a great position right now. So that's how I view things when I start to look into ETFs and things. So with inflation rising, you could see PBJ, which is, it's not looking great, but food and beverages, oil and gas could potentially, see there's a weird thing with the recession potentially coming. A lot of the demand for oil and gas and stuff would go down. But with inflation, a lot of these things can go up, and the war in Ukraine and some things going on in that sense, cutting production. So, it's tricky right now to look at any of these things. But I would keep an eye on, like, say, natural gas had a huge drop. Like, this is massive. We're seeing some green volatility stops and a breakthrough, but we don't have like higher lows yet. So if we pull back and start to go up again, that would be an excellent entry point, except that we have some resistance with the 50-day moving average. But you can see how far down the 50 is below the 200. But we are crossing up here. If you look at weekly, it's still not significant, but we don't have like here we had a crossover on the weekly. That's where, you can a weekly trend can help you see things a bit better. We did have a cross here, but it's up higher. It's not a great spot for crossing. You want a crossing at the 50, at the 0 or even lower, like would be ultimately more likely to be successful. If you get crosses up higher, if you look here, like where you cross this here, you get an uptrend here. But anyway, keep an eye on it. It's quite depressed in that sense, but I don't like to just jump right in there. I like to wait for an established uptrend, which would be a higher low scenario. But that's an interesting one. if the markets sort of tank, you can look at some inverse ETFs. And then, so if you want to buy ETFs, you can do that. Right now, like I said, you're in this, you got to see what's going to happen with the interest rates in terms of they're right at a resistance point. And then from there, you can decide, if you want to get into specific stocks. So if you decided to get into cash cows, you can click on this link in TC2000. You can see all the stocks that are in there, which is really cool. And then you can click on those to see charts. You can run your scans. So you can look inside an ETF, see the stocks, find the best ones. I've got these charts. I've created custom column sets. So if you create columns, you can right click on it and save the column set. And you can make it a default so that when you open a new watch list, like open a scan or whatever, it's going to, like an ETF would pop open, it's going to show all the columns. So these show the 90, 30-day, 5-day performance. So I can click on the 5-day and see what are the strong stocks right now. Southwest Energy for 5 days, it's had a 12% gain. So these are like resources. Obviously, cash cows are going to be things that are making money, which are oil and gas, gives dividends and stuff like that. This is all pretty much oil and gas at the top. Agricultural inputs, so this is Mosaic, MOS. It's looking pretty good since January as well. The other thing you'll notice is 8:56, which it shows here. That's the time, Eastern time in the States. So this is showing pre-market value. So you're seeing pre-market trading right now. So that's a nice feature. That's because, I have US real-time data. If I go to a 10-minute chart, you'll see a gray section. That's the pre-market. And if you're able to trade in the pre-market, you could potentially, that's useful to see the. So if you want to get TC2000 for free trial or check out you can get a $25 off a subscription. Check out the link in the description below the video. I've got a gold plan. There's different plans you can sign up for. Gold is what I'm using. And that's because, there's alerts and things that I want, certain features. And then I signed up for the real-time US data as well, so that I don't have to have a delay in the data. So I think that's going to be it for today. I've got these tabs on here. So if you want to find things that are crossing over right at this momentum point, like I've got, see right when this ETF oil refiners is crossing the MACD. And there's a Japan one. It's a bit high up here, but platinum is crossing. So this reached a support, kind of a double bottom here. So this might be something to check out, but you're crossing it here. So this gives you a quick way to find ETFs that are crossing the price percent oscillator moving average. I also like to look at things that are above the T line, like above the price percent oscillator and above the 8 EMA, so that I'm not looking at stuff that's down below so that gives you the, like I mentioned, the natural gas. This is in Canada, but this price percent oscillator has crossed over, so it's above. And then the agricultural one as well has crossed, it's above. And then that goes for the US ones. There's this bulk dry shipping. It's quite volatile and quite big changes. Like you can see, there's a 6.3% increase already. But I noticed that you got above the 8 EMA here. But the price percent also crossed. Like here you got slightly above, but you were still below the price percent oscillator. So this crossover happened, and it's been going up pretty fast here. Like 5-day trend is 18% already. So pretty risky one. And the UNG can also do that, but you had a crossover. So those are two. So right away I can see stock ETFs that are above the 8 EMA and above the price percent oscillator for momentum right away. So that's kind of one of the ones that, the areas that I want to focus on. So like if I look at steel, I think, oh, it's up 1.4%, but I go down here, I'm down below price percent oscillator. I don't want to get involved in that. I want to see across. So I can instantly filter out things that I don't, I'm not interested in. Hope that helps, and we'll check you guys out in the next video.